of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the fantastic Friday, the July 23rd edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, well, we've got you covered there too. You can always send me an email like Tim and Ray have already. Steve at TFNN.com is the email address. Inside the subject heading, please put radio show question, just as these two gentlemen have done. Thank you very much. And of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. Again, I'm Steve Rhodes. Welcome to the show. Right now, all U.S. indices traded to the upside. The Dow up 233, the S&P 42, NASDAQ 158, Russell up by about 1 point, semis 9, trannies 105, New York Stock Exchange 87, spot volatility trading down at 1732. That's below its 50-day exponential moving average, always positive for the S&P 500. Gold's off $3, silver down 11 pennies, light sweet crude up a nickel, natural gas up 4 cents, and the 30-year Treasury down 30 seconds, trading out at 163.28. Leading the charge, dollar-wise, the upside, you've got Google up 87, Roku up 38, Mercado Libre 31, Shopify 25, Facebook 22. To the downside, Sam Adams, Boston Beer down, what? $232? The heck? 24%. Domino's Pizza off 17. MicroStrategy down 15. Billy down $15 or 14%. So there's plenty to look at. Of course, I want to look at what you want to look at. Let's begin by taking a look at the equity future contracts out here. We begin with the ES Mini. What we can see here is the ES Mini is trading above the top of its daily profile. That profile came in at 43.84. You're at 44.01. If price closes above 43.84, the suggestion here is that price should go target 44.30. What is 44.30? 44.30 is the high down to the low. The high I'm referring to is the one that formed out here, looks like on July 14th, and the low coming in on Monday. So that would be your Fibonacci expansion. If we take a look at the NQ closed above the top of its bear structure daily profile. You know what we say around here, nothing more bullish than a failed bearish pattern. Well, we had it yesterday, follow through to the upside today. The same Fibonacci expansion level says 15,144 is its next target. I'm not saying price stops there. I'm just giving you the next likely upside target. In the case of the Dow, it is continuing with the top of its daily profile. The top of its daily profile is 34,946. We're trading at 34,946. So I don't know which way the Dow is going to break, but if it closes above 34,946, that too is a bear structure profile, and that would be a positive. The Russell 2000, what's it doing? Just dancing within a very large consolidation pattern. That's all. If it's going to pull back further, it'll have support at a 2136 to 2155 area, resistance at 2283. Let's go take a look at Stevie's other set of charts for the equity futures contracts. This will give us our TD9 count patterns. Is that the right chart, though? No, that's not it. It's this one. You love how I just have to talk to myself? Probably not. But I'm the only one I can't talk to when there's nobody on the line. So if we take a look at the ES Mini out here, you'll see that prices above its Rhodes Mini. Let me just expand it out. So this did generate a Rhodes Momentum Indicator top. That went ahead and took price back towards, not all the way down to, its breakout level of support, 42.05. Price is now above that pattern, and so things remain bullish. Bar number 3 of a TD9 count, so it doesn't look like now price is still rising with less relative energy. If we did get a bearish reversal signal and a close below the oscillator and change line, we would get another short-term topping signal. If we take a look at the NQ out here, the NQ is very similar to the ES Mini in that it's going to be bar number 3 today of a TD9 count. Prices never really had resistance to speak of out here. If there was any resistance, it was back here at the high from July 7th. The price is well above that level. The Dow. So remember, the Dow's trading into the top of its daily profile. And again, that number out there was 34,946. It's also, if it closes today above 34,883, it will negate its Rhodes Momentum Indicator signal from way back there. I believe that was May the 10th out here. But what it really needs to do to confirm the breakout, so to speak, is a close above that 34,946 level. That's what I'd be watching. Really not a tremendous amount of information in the daily Russell 2000 chart out here, so we won't spend any more time because it's really the consolidation pattern that you and I had looked at just a tad earlier. So now let's go to our first question out here that came in by email. Let me get back to my black background chart, and the first question coming in from Tim. So Tim writes in and he says, you're long a small position in Chipotle, CMG, looking for upside targets and resistance. So I believe Chipotle is at new all-time highs out here, but let's go actually take a look at it. CMG is the ticker symbol. So the next target, or the likely target, Tim, and one way for us to do this is, so what stuck out to me when I take a look at my 3-panel charts, we've got the daily, weekly, and monthly, weekly being in the center, was it was very clear that what Chipotle has done is broken through its consolidation pattern. So it was a consolidation pattern that really began forming right around the November 2020 timeframe, and the real break of it is really this week. We did see a break of it a couple of weeks ago, and then price came back last week and tested that consolidation, as it did on Monday out here, and now the next price target is 1852. You're at 1814. Tim, I'm not saying sell at 1852. I'm giving you what the next upside price target is, and that's based upon the consolidation. Remember, when you break through a consolidation, it provides us with a measured move. A measured move means that that move is equal to or greater than the consolidation pattern. So I'd be looking for some type of topping signal as price gets there. Well, how are we going to find that? Let's go take a look at my white background charts as soon as I can find them. Oh, by the way, on an A to B equals CD level, on a longer term basis, Chipotle's up at the 1 to 2 area, and very strong move. This says longer term 22.28. A food company, Chipotle, serving rice and beans out there. That is a beautiful thing. Now let's go take a look at its other charts out here, the other white background charts. What do we have? Day number 3 of a TD9 count. No topping signal there. On the weekly chart, we're going to be, where are we on the weekly chart? Bar number 7 of a TD9 count. Nothing to worry about there. Monthly chart, nothing to worry about there. Short-term time frame, 30 minutes. Chipotle has a TD9 count. If price can, so here's what you're watching short-term. Close above 1814. Says I'm back off to the races upside. A pullback to 1784 is nothing more than testing short-term breakout support inside of Chipotle. Rice and beans headed to 1852. Steve Rhodes with TFNN. You right?
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So nice moves in the equity markets today. If we take a look at what's going on inside the NASDAQ, and we'll do that by looking at the QQEW. That is the equal-weighted ETF for the Qs out there. And that is the top portion of our screen. And the bottom portion is the actual QQQs. Now, what I want you to notice is that in both instances, we are at new all-time highs. That is positive confirmation. What I mean by that is we always look to the equal-weighted ETF to tell us what's really going on underneath the covers. And so here we're at new all-time highs. We're above, in fact, the QQEW yesterday closed above a bearish structured profile. You know how we feel about that. Nothing more bullish than a failed bearish structured profile. So the move that we're seeing going on in the NASDAQ, it's absolutely real based upon using this. We have a different message inside of the S&P 500. Here, we take a look at ticker symbol RSP. So RSP gives each of the 500, or how many ever instruments are actually in the S&P 500. I doubt it's 500 exactly. But it takes each of those, and they have the equal weighting out there versus the SPY. And if we take a look at the SPY right now, we can see that it is trading above its all-time high, which was 437.92. But the all-time high in the RSP has not been breached. And that's at 152.85. Now, look, this can resolve itself over time. But right now, what we don't have inside the S&P that we do have in the NDX is a confirmation of that move higher based upon what its equal-weighted instrument is doing. Now, that then says, well, Steve-O, you've got to go back, see what's going on. Now, we also, if we take a look at the New York Stock Exchange, it's fairly subtle out here. But subtle is what we look for, right? So here's the advanced decline oscillator. That is panel 2. That's this blue line where my cursor is kind of going around. Now notice that so far today it's at a lower high than the session from was it just a couple days ago, July 21st. What's today? The 23rd. Yeah, from 2 days ago. Whereas if I take a look at the New York Stock Exchange in price, it is making a higher high. So now look, this can resolve itself as well. But right now, there are two diverging patterns that are always present before some type of top, short-term, long-term, whatever that might be. And we still have that declining tops inside the advanced decline oscillator, all along here. So just we don't have a rising tops or price yet inside the New York Stock Exchange. But again, a little subtle thing to pay attention to. Now, these would have plenty more meaning if we saw the spot volatility index close above its 50-day exponential moving average. Is that possible? Yeah, anything is possible. We actually have seen the spot volatilics trade higher since the open, but it's still below the 50-day, and that's really what is most important. That is at 1780. Price right now printing out at 1723. More likely than not, what the spot volatilics will do is go target the lower Bollinger Band reading, and that is at the 1581 level. So only if will those divergences have any meaning. If we get a topping signal inside the markets, inside the S&P, we'll take a look at specifically, and then we get a close below that oscillator and change line. And that would suggest a revisit perhaps of this week's low, or maybe the S&P 500 breakout level. So as I look around the markets and surf for everything else, those are the only patterns that I see worth noting and sharing with you with regard to divergences, so to speak, that are present before other market tops. Let's go to our next question that came in. This next question coming in from Ray. Ray G in Sarasota. Ray says, last week I sold the trading portion of your Kinder Morgan shares and would appreciate where the current pullback might bottom for a reentry. So let's go take a look at Kinder Morgan. KMI is a ticker symbol. And I don't know if we discussed this already this week, Ray, but if you're looking for the next possible buy area, it was this morning at 1709. So when we take a look at Kinder Morgan, we're going to see this completed an A to B equals CD, or I believe it did. Visually, it looks like it did. So let's draw in the A to B equals CD pattern out here. And boom, voila. In Kinder Morgan's case, we have that A to B equals CD to the downside. That completed at the 1704 level. That was on the trading day of July 19th. And so, Ray, the very next session was your bull separation candle out there. Very bullish candle. And that was your confirmation of the Gartley buy, or the buy the A to B equals CD. Price makes a move to the upside. And on this chart here, I can't figure out why it stopped there. We'll go look at my other charts and figure that out. But I just want to be able to answer this question. You do have the bottoming signal to re-enter this position. Only if you saw a close below 1709 would that be a problem. But really, because you had that bear separating line, the actual support level is the low of July 19th. And that would be 1691. So if you did get in a trade, your stop would have to be wide enough to encapsulate that low of 1691. And I don't mean put it at 1690 by one tick or anything. I mean, you've got to put it below that level. Now, let's pull over my other charts and see if we can understand why did price stop after that couple-day rally out there. And boom, voila, there we go. We have our answer. So now let me populate this chart out there. And interesting. So first, remember, and this is the cool thing about the oscillator and change line. When it changes colors, which it did on the trading day of July 16th, typically what we do is we begin to see a stalling of price. And more importantly, we see price and that line catch up with each other. Now, because it's red, what that tells us, Ray, is the price oscillator. That's the difference between between the 19 and the 39-day exponential moving average. That's a price oscillator is simply the difference between, or an oscillator is the difference between two things. Here we're taking a look at the difference between two exponential moving averages. When the price oscillator is below zero, this is just basic. You don't have to be really much of a technician, just have to memorize a couple of things. When the price oscillator is below zero, it gives you a, directionally speaking, a bearish signal. So a market that wants to move lower. When price is below a red oscillator and change line, that tells us we have a falling price oscillator below zero, and that is bearish. Now, today is going to become bar number 9 of maybe not. No, the TD9 count is going to go away today, so that's not another pattern. But where price is pulling back when it formed that buy the D point was right into its second breakout level of 1716, and that is a key level that needs to hold. So you're really in a neutral position here, Ray, right now, because you've got the bottom, you've got a rejection of that red oscillator and change line. So now let's just go look at the short-term time frame charts and see if we can find anything. So on the 30-minute basis out here, what the Kinder Morgan did was it formed wave number 7, letter G. That was the bottom back at about 10:30 on July 19th. Makes a TD9 count top, pulls back a bit, moves forward, makes another TD9 count. That's where we're at right now. There's an A to B equals CD pattern. I can't draw that in here, but do we have some type of bottoming signal per se inside of Kinder Morgan on the 30-minute basis? No, price is testing that red oscillator and change line even for the 30-minute time frame. So what I'm going to suggest you do, even though we've got the buy signal, it just depends upon your your level of risk out there. If you have a high level of risk, then now is the time, in essence, to buy, or could be the time to buy. If you don't, and you want to really just have this market prove itself to you, then we need to see something else going on inside the short-term time frame charts. There's your 30, the 65. Let's see, what does Stevie have here? Not much, but prices below its red oscillator and change line. Again, that says caution. The same on the 130. The same on the, let's see what's going on 195. So each of these time frames out here, you're right, it says caution. But if you were to ask me, do you have a valid bottoming pattern out there? I would lie to you if I said no, and I don't lie to you. So the answer is yes. Steve Rhodes with TFNN. Would love to hear from you as well. Give us a call, 877-927-6648. Hey, Ray, volume-wise, 17 million back at that low. Today, you're at 8 million. Steve Rhodes with TFNN. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So the next question going to Hector and the fuel injectors. And Hector wants to take a look at Facebook. And please give us your price projections, the A to B equals CD patterns out here. So as we take a look at our black background charts out here for those A to B equals CD patterns, we've got really two of them. One on the daily. And the daily A to B equals CD pattern has a price projection of 385. Now, 385 is simply the one-to-one level. So, Hector, if we take a look at the retracement, the B to C leg, you're becoming an aficionado of the A to B equals CD pattern. What we'll notice is that the retracement is just a 38% retracement. That tells us that odds favor that Facebook will do more than a 1-to-1 A to B equals CD. And so its 1 to 1.272 target is 409. Formula 409. If we take a look at the weekly A to B equals CD pattern gives us a price target of 411. So I like 409, I like 411, and on the monthly chart, we've got 411 as well. Let's take a look at my other white background charts here for Facebook, see if we can find anything else out. On a daily time frame, bar number 3 of a TD9 count, we don't see any kind of a topping pattern here. So that says that 409 level sounds good. On the weekly time frame chart, this is going to be, so if Facebook is going to form a top, and this is time to pay attention, this is the bar following bar number 9. So now this is the cool thing, Hector, and everybody else out there. Whatever this week's high is, right now the present high inside of Facebook is 375.33. If we see Facebook start trading above 375.33, granted this is a weekly chart, which means we need to know where we're at next Friday. But nonetheless, if you start trading above it, it's an indication that on a weekly basis, this TD9 count pattern has failed. The positive about that would then be the mere fact that that larger 411 price projection would remain in place. So it's the weekly right now that you've got to pay attention to. 4 additional signals. On the monthly time frame, nothing to pay attention to, and no reason for us to go look at anything else really. So as we take a look at Facebook, well, it does have a TD9 count on its 30-minute time frame. And what this really suggests is that Facebook should pull back to test the 369 to 370 level. If there was a close below 369, then we'd be looking to move back to 358. So that's what's going on with Facebook daily, weekly, monthly, as well as its 30-minute time frame. The next question coming in from John inside the Tiger's Den. And John wanted to take a look at, was it John who was first? I think so. Which is well, we'll just do this first anyways. And the question is Google. Where is there a top? Is that what the question was? What's a price target, if any? And yeah, this one becomes a really difficult one to come up with a price target. Just looking at the monthly time frame out here. In fact, let me get Google populated on my other chart too. So the only thing I could come up with, and John, is probably what you've done as well, is I'm just using kind of a conservative A to B equals CD pattern on the weekly time frame, starting down at the beginning of our year, January of 2021, and making my B point the high that came in April 26, very shallow retracement. The 1-to-1 here gets us to 29.83, the 1 to 1.272, about 31.88. I want to pull over my other charts out here for Google, daily, weekly, monthly, just so we can see if there's any kind of signals, TD9 count signals, Chapman wave signals. And on the daily basis, there is no signal other than the fact that a TD9 count here failed yesterday. So suggests a strong momentum move. You're in bar number 3. I don't see a topping signal here. I know you were asking for price projections. We've already done that. What we're doing is before we say, hey, those price projections are solid, where are we on our different technical indicators? Well, this is going to be bar number 8 on a weekly basis of a TD9 count. We know that the high can come in on bars 8, 9, or the bar following 9. So it says this week could be a top for Google, or it could be next week or the week after. What's the monthly chart tell us? Monthly chart says, I don't know what you guys are talking about, some type of a top out here. So you're in bar number 8 on a weekly basis. Looks like it's going to extend to bar number 9, maybe the bar following 9. No topping signal on a daily time frame. So as far as price projections out there, we'll just have to go ahead and go with our 29.83. I'm not really sure how else to do anything else out here with this, because it's just a series of AB equals CDs to the upside out there. So, John, I hope that helps you out. The next question was to take a look at the Apple, AAPL, for SIBA inside the Tiger's Den, AAPL. And I think the question was just Apple, please. So here's what we know about Apple. Trading above the top of its daily, bearish structured weekly, and above its monthly profiles. On a monthly basis, this has already attained the 1 to 2, A to B equals CD. So its next upside price target would be $174. If I take a look at expansions of swing points on the weekly basis out here, we'll go ahead and use the high of the week of January 25th, and the low is the week of March 8th. The 1.272 expansion, for Apple, gets us into 152.95. The 1.618 gets us into 162.94. On a daily time frame, price is still not taking out its highs that it made last week. That high came in on the trading day of July 15. There was 106 million shares traded that day. You're at 48 million shares, so you're pushing a swing point. You're doing light volume. Says at least that high gets tested as long as there's a close above 147.09. Let's pull over my other charts here for Apple. What we're really interested in is understand on a daily basis, was there any kind of a topping pattern that formed when it made that high? And the answer is yes, it was a TD9 count. Now, the TD9 count took price back to support. Now, where was support? Remember, in the case of Apple, its profile was a bearish structured profile. Once price closes above a bearish structured profile, if price is going to dip back inside it, it will usually, if it's just a counter trend move to the downside, where price will find support is at the center of that bearish structured profile. That number was 142.48. The actual close for Apple on Monday was 142.45. 142.45 versus 142.58. Are we going to let those 13 pennies, or how many ever that actually was, I think it was 13 pennies, negate that pattern? Absolutely not. Because in the very next day, Apple closed right above that green oscillator and change line, which is where it's trading right now. So we have a valid top on a daily basis. Price pulls back to that counter trend rally support level. You're above a green oscillator and change line. That suggests that those highs are going to get tested. That, in essence, is what we just said when we were taking a look at the black background charts out there. So on a daily basis, it's just now if price closes above that TD9 count, tells you about a strong momentum move. That high, by the way, is 150 even Steven out there, one of Basil's, Chapman's round number highs. But if price takes that out, that tells you about that strong momentum move to the upside. From a weekly standpoint, as we take a look at Apple, this is going to become bar number 6 of a TD9 count. So that says that's got 2 to 4 weeks before that might form a top or a high. On a monthly basis, when we take a look at Apple out here, this is taking out a TD9 count top. And that took place back in, let me get my cursor. That took place the month of, it was really 2 tops out there, January of 2021, 3 tops, wave number 7, letter G, TD9 count, and Rhodes momentum indicator top. But price never really, for one period of time, one short period of time, closed below that green oscillator and change line. The monthly chart for Apple SIVA is extraordinarily bullish. Folks, it looks like, it's beginning to look like Christmas out here. No, what it's beginning to look like is the move down, the normal unfavorable seasonal cycle. That was Monday. That was it. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So our next request comes in from one of the group of 7, Canada, France, Germany, Italy, Japan, the UK, the US, and the European Union, right? Isn't that the G7? So G7, which of those countries do you represent? But G7 wants to take a look at Cisco. Ticker symbol there is CSCO. And as we take a look at its charts, the very first thing that we notice, or that I notice, down here on the monthly chart, we had a nice consolidation pattern that was in place out there, and price busted through that back in 2017. And what price did was it went ahead and made that measured move equal to or greater than the consolidation. Okay, so that pattern is long gone. It made that, then it went ahead and pulled back all the way to the bottom of consolidation. Now it's back up to the top of the consolidation. G7, that could just mean that we're in another consolidation, and all Stevie has to really do is just simply copy and paste again. And so we're not there just yet, but we could be seeing another breakout inside of Cisco to the upside. So on the longer term basis, I would say price gets back into about the 76 type area out there. So that's what the monthly chart is telling us. But let's go take a look at what's going on in the daily and weekly and try to figure out what are the hurdles. Well, the first hurdle is Cisco on a daily basis is taking on the trading day of June 11th. We're going to go find out what went on June 11th. Was that a top signal, topping pattern or not? But 55.35 is the number. Had volume there of 17 million, and you're pushing into it today with about 6 million shares. It has not tested the swing point. This is one of these where so far the high of the day is 55.34, and 55.35 is that swing point high. And this, a technique that Obi-Wan has taught us, is that when you don't take out that swing point and you just nest right below it, which right now it's just nesting right below it, it may be ready, maybe trying to just simply gain energy to simply take that out, which would then kind of help us out with regard to that longer term consolidation pattern as well. Now that's what's going on in the daily. The weekly chart out here, if price can clear that level, then it would suggest that price would go back and attack its highs from back in July. That's in the 58 area. On a weekly basis, that same swing point from June 7th, that had volume of 84 million. Now that's being tested with 73. Again, you're coming up light. Does that mean that it can't continue to move higher? No, it just means that you're not getting any kind of volume breakout message. Now, back to Stevie's white charts out here on the daily time frame. There we go. Voila. So the top out here that we were looking at, takes us into June 11th. And June 11th was a TD 9-count pattern. What does price do? Pulls all the way back to the breakout level, 52.40. Actually closes slightly below it on June 18th. Back above it, saying it was a one-day wonder. It was a false breakout to the downside. We've seen that level get tested one more time. That was back on July 6th out here. I don't see a topping signal in the current run, but it's up against that resistance level. So that resistance level is really key to you, G7. We're going to go, who are you representing? Not the U.S. Probably not the U.S. You're probably, the Olympics. So Japan is being represented inside the Tiger's Den. I'd be Japan for the next couple of weeks out there, although I thought the opening ceremonies was a bit lame out there. Now, I didn't catch the full opening ceremonies out there, but it seemed pretty lame to me, which you got to feel pretty bad for the Japanese folks. Yeah, I do. You know, so I've spent a lot of time over there. When I say a lot, I mean a lot of time. I owned retail stores. I owned retail stores in Tokyo, retail stores in Osaka, and some of the other outlying cities out there. When they show, it's amazing. I was watching the games. I began watching them, I think, Wednesday night, Thursday. Yesterday was rowing, which, you know, I row. So I loved watching that and watch them. They were doing a 2,000-meter row. I do that, and that's a little over a mile and a quarter or something like that. I've been able to match their splits on the first 500, but I cannot match their splits like that going through 2,000 meters. And it was, for me, fun to watch what they're doing. But back here to Cisco, because you don't really care about that, and somehow I went off track out here, you can see that on the weekly basis, it's also important for price to clear that level because that was a Rhodes Momentum Indicator top. And so you've got that Three River Evening Star, and so that 55.24 level is really key. Now, is price going to turn down from here? I don't know. We know that price is up at a key resistance level. And so then we move to our short-term time frames. And here we've got the 30-minute. And there's a Rhodes Momentum Indicator signal. That was triggered at 1:30. Right now, the candle formation out here, G7, is potentially a bearish reversal signal. But what you're really watching is that green line, the oscillator and change line, even if you got a bearish reversal candle. Now, there's a reason why you want to pay attention to this, is that if we did get a bearish reversal candle and price did close below its oscillator and change line, 55.16, the next level of support is all the way down at those daily or the 30-minute profiles, my apology, 54.62. So that's what you would be looking at. But everything looks pretty good, but price is at resistance, and now Cisco has to prove itself to you. And if it can't clear this level, if you can't bust them up, what do? You try to bust them down. That says you could revisit the 5240 area. So that's our review of Cisco for G7 inside the Tiger's Den. Next question coming in from, you know what, Dan, I'll try during the break. I don't think that, let me see here if I can get it. For some reason, I was having some trouble with some of the futures contracts. I'm going to just try to pull it up on my system out here. Oh, whoa, wait a minute. I've got it. Okay. No, I don't. Gosh, dang it. Dan, I know you're asking me for that OUL, and I can't pull that up for you. Not because I don't want to, but because my system and my charts are not pulling that up for us. So my apology. I still got to get in touch with Ninja to try to figure out what's going on with a couple of these futures contracts. So my apology there. But folks, the phone lines are open. There we go. John is asking, oh, you smell a TD9 count and natural gas on the daily time frame. So let me pull that up. That I know at least was working earlier. So now natural gas, John, let's go take a look at that September contract. And your question is about a daily TD9 count pattern. So now as we take a look at it, you've got a ways to go. You're only going to be in bar number 5 today. What I do have is wave number 7, which I know you like out here, but that has not been confirmed. And right now, as we take a look, so you do have that one potential topping signal. Now, price would need to close below 389. Oh, thank you, Bill. Always good to have a wingman to help out Dan there. That's great. So as we take a look at natural gas out here, John, from a TD9 count standpoint, of today's bar number 5, you've got 3 to 5 more days before that pattern could take effect. Now, that was on the daily. On the weekly time frame, as we take a look at it, the weekly time frame is also in wave number 7, letter G. Today is going to be bar number 6 of a TD9 count. That says 2 to 4 weeks before that topping signal could come in. So hopefully that helps provide you with the information you were looking for on natural gas for the September contract out there. So let me see. Did I get everything else? And I think the answer is yes. I think the answer is yes. So we're about to go to a breakout here, and then that's going to take us into the last 2-minute segment. Let me just check you got the Dow up 243, the S&P's up 44, the NASDAQ 100 up 172 points out there. And, yeah, there is a Dan wants to take a look at Spice Girls, SPCE. Dan, what's your favorite Spice Girl out there? SPCE, which is really Virgin Galactic. Trading below the bottom of its daily profile out there. Even though it took off, went to the upside, its stock is taking off to the downside. Steve Rhodes with TFNN. We'll go try to figure out where space is going to land. Could be $19.96.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back. We're taking a look at Space, SPCE, Virgin Galactic Holdings out there for Dan. And Dan's question is, can I give him a direction? Well, the direction is to the downside. So as we take, so when this topped, here I'll just pull over the chart, that way you can see it. It topped with a TD9 count. It was on bar number 8. So we just expand out the white background charts. We don't have any kind of a bottoming signal at this stage. We know the price broke through the first TD9 breakout level. That was 34.83. There's an A to B equals CD to the downside. We don't have any kind of bullish reversal candle to confirm that that pattern is complete. So until that occurs out here, 1586 becomes a downside price target. Price is below its oscillator and change line, so it is also below the bottom of its daily profile. Now it's moving into a prior swing point with light volume here, Dan. That swing point was from July 19th. Did volume of 69 million shares. You're moving into it with 14 million shares. Nonetheless, price is below the bottom of its daily profile, below the center of its weekly profile. And that suggests another price target area would be 1996. And 1996 is the bottom of the weekly profile. You can see the one, and back to the daily, you can see that the next level price target to the downside is 25.54. That would be your 1 to 2 A to B equals CD pattern. So there is a Gartley pattern that is present. What it needs, Dan, it needs a bullish reversal candle to complete that pattern. And then when it does, then we would say, okay, there is a bottom that is in. So not until then would we have that signal. So hope that helps you out, folks. You got the Dow up 234, the S&P up 44. Everything looks rosy out here as prices above the top of the daily profile in the ES and the NQ. The spot volatility is below its 50-day exponential moving averages. That is the ingredients for a market that wants to move higher. Not being confirmed that this is a great breakout. Not at this stage of the game. Is the I don't have that. I close that up. There's the equal weighted RSP, which is not taken out its highs. Folks, have a fabulous weekend. Thanks so much for being here. Be safe out there. Enjoy yourself, and we'll look forward to seeing you on magical, magnificent Monday. Have a fabulous Friday. Great weekend.
Building wealth trading in